You are welcome to this lesson. Today we are going to discuss about the transfer pricing, right? In the manufacturing account, in manufacturing, transfer price, transfer price, transfer pricing, right? What is the transfer pricing? This is the manufacturing account, right? Manufacturing account. Okay, in the manufacturing account, we used to maintain the manufacturing account at cost. Understood? That is what we have done in previous exercises and everything. Now, sometimes the company owners may think, or they wanted to see how they wanted to make this manufacturing section as a one profit center, right? One profit center, because they wanted to know by establishing this manufacturing section or plant whether it is worthwhile for them to run this manufacturing plant, right? Whether it is worthwhile to manufacture the goods in house and sell it to the outside people, or whether it is advisable for them to purchase it from the outside, right? So for that purposes, they may want to convert this manufacturing section to the profit center. So they may, if you say there is a prime cost and cost of goods product, cost of goods produced, right? Cost of the goods produced maybe 1000, right? Prime cost maybe 700, okay, or 600 or 500, and they may wanted to fix a profit profit of, they may keep 10% margin. That means 1100. This is the, at this price only, transfer price, transfer price price to trading account. This is the transfer price to the trading account. First of all, we are arriving at a prime cost. Thereafter, cost of the goods produced, and thereafter we are calculating the profit margin because we want to convert this section as a one of the profit centers of the company. So profit centers means we have to calculate one, fixing the margin of 10%, and this is the transfer price, right? Earlier we had a our transfer price is cost of the goods produced, right? That is the transfer price to the trading account. Now transfer price to the trading account is 1100. This is the profit element. This is the profit element of the manufacturing section, right? But whereas international accounting standards says when you are valuing your inventory, it should be valued at lower of cost of the goods or the net realizable value, cost of the goods or the net realizable. Then at that stage in the balance sheet, in the balance sheet we cannot show the transfer price, right? This is P&L. This is the P&L, profit and loss account, right? We cannot transfer this, we cannot in the balance sheet under the current assets, current 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 assets, we used to mention this finished goods, cost of the finished goods produced, huh? Okay, finished goods produced, okay, finished goods. We cannot mention this 1100, but we had to take it as it is, right? 1100, right? In the balance sheet, how whether can you show 1000 or 1100 as per the IAS 2 international accounting standards? You cannot, that says where the inventory should be shown in the balance sheet or in the inventory should be valued at lower of cost of the goods or net realizable value. Then we cannot show at this price, we can show this price only. So 100 rupees we have to eliminate, 100 rupees we have to eliminate. This 100 rupees is mentioned as unrealized profit because the profit is not realized, okay? Unrealized profits. This is unrealized profit, not realized. This profit is not realized. This is a unrealized profit. This unrealized profit has to be eliminated from the finished goods mentioned at the current assets. So what is the double entry? You have debtors account, not finished goods account, right? Finished goods account, finished goods account. Here you will open a account called unrealized profit, unrealized provision for unrealized profit, provision for unrealized profits, right? Provision for unrealized profits. Okay, here finished goods we are transferred from the manufacturing, transferred from manufacturing, transferred from manufacturing plant is 1100, 1100. Okay, so transfer is finished, and there are to another account, unrealized profit, unrealized profit. unrealized unrealized profits, right? Three T accounts you have to open. So, right? One is finished goods account, that is brought forward balance 1100, and provision for unrealized profit account and unrealized profit account. Just like the entries we pass for the debtors, just like the entries we passed for the debtors, we had to pass entries here. So if you want to make a provision, what is the entry? Unrealized profits account debit 100, right? Provision for unrealized profits, right? Here credited unrealized profits 100, right? 100. This provision, the unrealized profit, the goods, finished goods amount will come under the current assets, right? So okay, the unrealized profit will go in the P&L, right? Under the what do you call, under the sales or whatever thing, or other expenses or something, you can say unrealized profit, unrealized realized profits. Here debit balance will be there, here credit balance. Debited to profit and loss account, unrealized profit, and this will go to the profit and loss account 100. Right? The double entry is accounting treatment is okay. The accounting treatment is unrealized profit debit, unrealized profits debit 100, right? Provision for unrealized profits credited 100. This is the accounting treatment. So unrealized profit in finished goods, provision for unrealized profits. You will deduct 100, then show 1000 as the cost of finished goods. 1000 as the cost of finished goods. So this will be carried down balance 100. This will be the brought forward balance 100. Okay. Okay. So this is transferred to here. This is transferred to the charge to P&L. Okay. This is the accounting treatment. Understood? Have you understood? The man in the manufacturing, if you charging the, if you calculating the transfer pricing, right, to the trading account, if you are transferring your products to the trading account at the transfer pricing basis, then there is an unrealized profit element will arise at the closing stocks time. At the end of the financial year, when you are calculating the when you are doing the financial accounts, you have to eliminate the unrealized profits which is included in the finished goods, because this is not realized. These profits are not realized, right? The closing stocks profits. So we are eliminating that. To eliminate unrealized profits account debit, provision for unrealized profits account credit. This is the one example. Now example 1. Example 2. Example 2. Subsequent year, the cost of the goods is 5,000, right? Profits 10%, how much? 500. Then transfer pricing is 5,500, right? In this case, right, your it's closing brought forward, right? Right. Now the carried forward balance is, wait, sorry, carried on balance is 5,500. Okay, 5,500 in the sense 500 has to be charged, right? Then you will charge 500 unrealized profit, 500 year 1, year 2, right? This is year 1, this is year 2, right? 500, this is provision for unrealized profit. Here you will say year 1, year 2 you say provision for 500, right? The carried down value should be the 500, right? Brought forward balance should be 500, because here we have 5,000 worth of goods, right, for the year 1. Year 2 we used to say finishing goods 1,000, 5,500 less provision, less provision for unrealized profits 500, then 5,000 is the cost. And here in the P&L, right, in the P&L we have to P&L we have seen on year 1 unrealized profits 100 debit, no, debit and credit 100. In the year 2 unrealized profits of it 500, right? Right, right. Unrealized profit is 500 because here you will transfer P&L 500, right? This 500 goes to here, right? It is okay, fine. And this 500 goes to this debit, fine. And difference in the unrealized profits, it will go to the 100, saying profit and loss account credited to 100, right? If it is here unrealized profit, uh, provision increased by 100, then you have to charge it to the P&L 100. Increase in profit, increase in provision for unrealized profits, right? 100. So this also okay, this also okay. We have balance sheet, this is subsequent. Okay, so have you understood the unrealized profits concept of unrealized profit? I hope you would have understood. Okay, then shall we go for the in second lesson? In the next lesson we will be doing the exercises in unrealized profits. Okay, thank you.